On this channel, we break the silence around money. We talk about saving, investing, taxes, debt, income, and wealth building in a way that is practical, realistic, and relevant to everyday life. So, welcome, subscribe, share, and like. Now, today we're going to talk about saving versus investing. What should I what should you do first between saving and investing? And you should ask yourself, what is saving and what is investing? From the comment section, you can comment what you should do first between the saving and investing. Now, the big question is, should you save first or invest first? Should you save first or invest first? The answer is, it depends on your situation. Because let's say if you are 25, you are on your beginning of your career. Let's say in the last 2 months you received your first paycheck. What should you do? Investing or saving? And let's say if you are in your 40s, for the last 15 years you have been receiving paycheck after paycheck. What should you do between savings and investing? And the third scenario is whereby, let's say if you have 1 million in your bank account and there's this person who doesn't have anything, usually survives on hand to mouth. Should these two people save first or invest first? Now, let's stay by defining what is saving. Saving is a money kept safe, can easily be accessed, and is where it has been kept, whereby it's a place where there is a low risk and there is also a low return. So, in a nutshell, that is saving. You keep your money in a M-Pesa account, in a bank account, or in a MMF account, whereby you can access your money very easily at a low risk and low returns. Now, examples of saving: emergency fund, short-term goals, fixed deposits, and savings account. So emergency funds are like the money market account, whereby you can get a 9% interest. Then short-term goals are goals within let's say 1-2 years to 5 years. You put your money in a saving account that runs like for like 5 years. Yeah, you do a savings every month, now and then, for a short-term goal. And also you have fixed deposit account and a savings account, whereby these are accounts, banks have them, insurance have them, and insurance usually have advantage if you have advantage if you have the savings account, because there is a protection in it. Now, what is investing? We have learned about what is savings. Now let's get deep into what is investing. Investing is putting money into work. These portfolios are always high risk and they have a higher long-term returns. Example of investing: putting your money into stocks, into government bonds, mutual funds, and also real estate. So stocks, we have Nairobi Security Exchange. Bonds are like infrastructure bonds. We have government bonds, the treasury bills. We have corporate bonds. Why you should save first? Now, the first thing you are supposed to do is save first before investing. This answers our question in the first slide. What should you do first between savings and investing? So you should save first, because for someone who is starting a career at 25 years, he doesn't have the 1 million. The only thing he has is the net pay. So this person is supposed to build a fund. Let's say is supposed to save for like 5 years to build a fund of 1 million shilling, and this person is supposed to be doing savings every now and then to build the fund. Now, after building the fund, you use the fund to invest. It's just simple like that. Start by savings, by doing a good portfolio. Let's say 1 million. Doing 1 million, take the money and invest in stocks, in real estate, government bonds. So why should you save first? It covers emergencies. It prevents debt in the near future, because in the future you'll be having kids going to school. So if you don't save first, you'll take a loan to finance their education, and also it provides stability. When investing comes first, investing should come first after a stable income. You have an emergency fund ready, and also you're looking for a long-term goal. A long-term goal can be a retirement goal. Let's say you are 40 and you're supposed to retire at 60. So after building a fund from the saving account, you're supposed to put your money into a retirement fund that will be giving you a 1% every month after retirement. No, this is the right order to do it. First, you start with the emergency savings, then you pay off high interest debt, then invest consistently. Now, these are the common mistakes that people make. They start investing without savings. You're earning 50,000, you decide to put 20,000 in stocks. What will happen? So you start investing first before savings. You only do savings only, never investing. You're supposed to do this thing both. They're supposed to go hand in hand, and they are supposed to complement each other. Then you are chasing quick returns like Forex. Now, simple framework: save for safety, invest for growth. So I have a final takeaway here. Saving protects you, investing grows you. Saving protects you, investing grows you. And you need this thing. You need both of them, because they go hand in hand and they complement each other. As you save, in your future you're supposed to invest the money that you have saved. Now, if you want to open a saving account or a investing account, call or WhatsApp me on 0748 344 096. Thank you for watching. Subscribe and like and share